Welcome back to the show, Rick.
Thanks for inviting me on, Jim.
Are we getting confusing signals about what's happening with the U.S. economy?
Well, I surely am. I've got a technical projection. I look at the charts, and I'm looking at the Dow, and some time ago I put out a forecast of Dow 21,000. Now, the exact number was, I think, 21,104, and at that point it was about a 1,200-point rally, and it just seemed impossible to me. On the one hand, the charts are saying big rally ahead, but in the real world, I'm looking around and thinking there's nothing that gives me confidence in this economy. I think the most positive thing you could say is that we may luck out, and some of the things that Trump is doing will make it easier to do business in this country. But even now, you can see that there are corresponding hazards or possibly offsetting hazards with, let's say, what they call border adjustment, where U.S. exports enjoy tax-favored status and imports or get taxed. And, of course, that could be a real problem. And if you sort of compare the worst of what could happen with Trump trade policy to the 20s, when even now to this day we debate the idea that the Smoot-Hawley tariff was what brought the stock market down and triggered the Depression. Well, we're definitely leaning in a protectionist direction right now, and that could be the straw that broke the camel's back as far as this bull market that's been chugging along now for almost exactly 8 years. So the headwinds are very considerable, and I could tick them off for you, but I'm very distrustful of the economy here, especially of the phony picture that the Fed creates ostensibly to justify raising rates some more.
Well, it seems the U.S. Fed and the Bank of Canada both seem to deal in unreality. What they report and what is actually happening are two different things, and they both failed to bring up the risks going into the last recession. Why would they point them out going into a new one?
Yeah, the central bank is never really good on making predictions that have been borne out about recession. There's never a recession in the horizon of Fed forecasts. And this time, though, there's so many things building up that could do it. For one, we've absolutely had a peak in real estate because we've got kind of a perfect storm here with mortgage rates up maybe 70 basis points off their lows, and at the same time, we've got housing prices rising because the supply is so tight. So this long ago killed the refi market, and it just about snuffed the first-time buyers. So we don't have much left, really, except a lot of very pricey real estate for existing homeowners, and even there in such frothy places as San Francisco and Vancouver, we've probably seen a top in the real estate market. So that's a big thing, and for the same reasons that we've seen the top there, we may have seen a top in auto sales, which had a record 18.4 million units last year. We're not going to see anything like that this year. So another story that there is a almost certain bust shaping up in the agricultural sector, which takes in more than just crops. It's big manufacturing companies like Caterpillar and John Deere. So, and at the same time, we get this Fed blather about, hey, we don't want to risk having the economy overheat, so we're going to raise interest rates. Well, the economy is about in as much danger as of overheating as as the planet is experiencing a Martian invasion. But the Fed still sort of talks its book, and it wants to give itself some room to do whatever it does with interest rates, but there's no way that they can do any serious tightening here other than what the market does by itself. The Fed is not going to leapfrog the adjustment that's already occurred in long-term rates, and so, but we get these phony non-farm payroll numbers, and the unemployment number is pretty low. But when you look around in your own life and you talk to people, your friends who are in businesses or who are working as hard as they can just to keep their heads above water, you understand that on Main Street, the recovery never really happened, or it's only happened to a very small extent relative to what's occurred in financial markets. So I think it's a deception to be looking at the Fed's rosy view of the economy, even to the extent that they talk about overheating. That's so far-fetched, it's almost surreal.
Do you think they're going to push ahead rate hikes anyway?
No. There may be let's say a token tightening in March, but again, they'll only be tightening to catch up with the markets themselves. And the markets have sort of repriced money. Interest rates have adjusted upward, in part on the prospect that business is going to be better under Trump, that the economy might start to improve somewhat. But I think that's already very much discounted, not only in the stock market, but in the bond market. And I'm looking right now at what it looks like a potentially important turn in bonds. You know, we had a nasty sell-off in bonds and a corresponding increase in long-term rates since July. And over that time, as you can imagine, everybody's sort of come out of the woodwork and saying, well, the deflation is dead or disinflation is dead, inflation is the bet. I'm not buying that at all. There's so many things out there that would crush an incipient inflation that, although we may see some tightening in labor markets and some grocery bin inflation, I think it's really far-fetched to talk about a resurgent inflation.
Well, when you said the auto sector is looking at a downturn, I've noticed that all the sort of pre-Christmas sales have been continued into now.
Yeah, and, you know, that's been a fact of our lives over the last 20 years. It seems like everything's going on sale all the time, and you know, a couple instances where retailers tried to hold the line, say we'll do anything but discount. They really took it in the chin. Abercrombie was one example. You know, some of the mall clothiers that were selling what for the teenagers would be the high end, they really got crushed with this mistaken idea that they could hold the line on prices. So there's cost cutting everywhere, and you know, it suggests that if there's no pricing power as such, then how are we going to get inflation?
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, I've heard some U.S. companies are trying to import as much as they can right now and are hoarding that product in case there's a 20% border tax. Anything behind that?
Well, to the extent there is, and there probably is, you know, we're going to have an inventory buildup that sort of falsifies whatever economic strength the Fed is talking about. But, you know, a number of things have happened in anticipation of whatever. We had a little flurry of an increase in existing home sales in December, but any idiot could see that it was really with the idea that you better lock in a good mortgage now and do your house buying before the year was over. So I don't know. It's to me, it's dangerous to the extent that companies are laying in inventory ahead of whatever changes they might anticipate under Trump.
Prime Minister Trudeau will be visiting with President Trump on Monday. What do you think is going to be going on in that meeting?
Well, I think we can always stay good friends with Canada. We have huge trade flows between the two countries, and I think that's going to ultimately prove true for Mexico. Even though Trump talks a tough game, Mexico wants to do business with us, and we're going to find that it is in the interest of their interest and ours, of mutual interest, to continue to do business. So I think that, let's say, the radical trajectory of Trump's proposed trade changes is going to flatten somewhat, but with Canada, it's not. It never was a problem, and I don't think it will be. Canada is a good trading partner, and we easily find ways to do business with Canada.
Well, Canada and the U.S. enjoy the world's most prosperous trade bloc, and also the integrated trade between the countries. An object that's made in the U.S. or Canada goes across the border something like 6 times before it's finally sold. That's how integrated it is. You start taxing that. What, are you going to put 20% on every time it comes back into the U.S. to have a bolt added to the widget?
I don't think it'll happen because, Trump's ideas about trade with Mexico are conflated with an immigration problem, or, to the extent that so many U.S. businesses use Mexican labor, it's really more a solution than a problem. So with Canada, I think, at least the somewhat xenophobic perception is really at a minimum. Canadians could flood into the U.S., and we would never know it except for that, the rising tone at the end of the sentence, eh?
And we don't even do that anymore, studies show.
I know. You sound almost like an American, Jim.
Well, take a look at how many of your anchormen are Canadian and how many of the actors you watch on TV and in your movies are Canadian, and you have no idea. There's more than just William Shatner.
Infiltrated, and who would know unless you read about it, right?
Well, how many times has a Canadian played the U.S. president? Take Mr. Sutherland in the latest TV show about the successor.
Yeah, they pull it off really well. I mean, you honestly can't tell them apart, and that's why, so many Americans backpack in Europe with Canadian flags on their knapsacks. Everybody likes the Canadians. They haven't done as many countries or people wrong as the U.S. Arguably has. So you travel better with under the Canadian flag.
Is there any one area right now you think investors should be headed for in case, the Dow doesn't keep climbing but does do a giant plunge?
Well, 2 areas. I get a feeling that this rally in gold could be the real deal. Since gold has gotten crushed after making a very strong rally earlier in 2016, I'm cautious, but let's say I'm cautiously optimistic in gold. So if gold is in a prolonged uptrend right now, if it's beginning one, that's really going to have very bullish consequences for some of these mining stocks that have been sold to death. Many of them are well run, and they have they've got reserves up the wazoo. They can, I've gone on tours of mining sites, and the CEO with just a kind of a wave of the arm will say, well, we've leased all this, and we'll be looking at a whole mountain range in Nevada. So there's so much bullion in the ground and so many companies in good control of it that oversold as they are, I think they're a great place to be, even speculatively. And also, as I implied earlier, long-term bonds and muni strips, something that goes out at least 20 or 30 years on a yield curve, are looking good to me, because I do not think we're going into an inflationary period. I think we've had what you would call a dead cat bounce. So if that's the case and long-term rates are going to head down again, and I've got targets way lower on the 30-year Treasury, it just traded up above 3.2%, up from a low of 2.1% last July, and I've got a target on it down around 1.64%, with the 10-year note coming down below 1%. Now, I can't promise you that, but if those numbers were to be realized, if those targets were to be reached, the corresponding capital gains in long-term bonds would be on the order of, well, they'd be significantly higher even than 20% a year. So that's where I would park my money.
we're not hearing much about the Italian banking crisis or the situation in Greece. Are those things to be worried about?
Well, it's interesting the way that the news about those worries just kind of comes and goes. You know, just the other night, I was having dinner, and we got to talking about whatever happened to Greece. You know, you don't see it at all. And then, coincidentally, there was a story in the Journal the next day about Greece and the problems that are still simmering there. But I didn't really know if you'd said, well, did they ever implement the austerity regimen that had been demanded of them by Brussels? And apparently the answer is yes. They're living in austerity, at least in a political sense. And I guess because we haven't seen cars being torched on the street, that my guess is that it's not too severe an austerity that has constrained them. You know, I think they've sort of worked out a truce with lenders, and things are sort of going on an even keel. And as long as the engines of prosperity in France or in Europe are looking at least solvent, let's say nominally solvent, then it seems like we don't worry too much about the likes of Greece and Italy. And of course, Italy has an even more thriving gray and black market than Greece. It's really a very prosperous country under the surface. But in the background, of course, is at this point, increasingly likely prospect that Marine Le Pen will be elected in France. And if that occurs, you're going to see a strong political tide to pull France out of the European Union. And so I would say that shorting the euro at this point is a no-brainer. My long-term target is 80 cents, and I can see with the possible election of Le Pen how the euro could get there.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.